So basically what happens, if you take this 350 you have purchased and the $80 machinery which has gone out, basically what we record in the balance sheet is gross value. Gross value means value at which it has been purchased, the original cost, the original value, that is the gross value. What is the gross value of the machinery that has gone out? $80 is the value of the machinery that has gone out, that is what it says. So $350 worth of machinery you have bought, that is 1910 plus 350 minus $80 worth of machinery that has gone, minus 80 will basically give you this figure of 2180. Am I with you on this? You just check that out if you need. So what is the cash inflow and outflow? Cash inflow is 350, cash outflow is $350 because you have bought a machinery. You have sold some old machinery and whatever you got, only $20 is what you have got. $20 is basically the cash inflow out there. There is nothing else beyond this. So this gives me what is called as cash flow from investing activity. That will be about, how much is it? That will be roughly about $30. It is total plus and minus, plus 200, plus 200, 400 minus 350 is about 50, 50 minus 40 is 10, 10 is 10 plus 20 is about 30 out there, straight, simple. No numberology, so you can just do addition, subtraction mentally. Keep it aside. With you on this, so we did cash flow from operation, we did cash flow from investing. Now what is left out? Cash flow from financing activity. Let us do that. Now can you list out the cash flow from financing activity? Yes, Swapnika, go ahead. Don't worry, take a try, don't feel embarrassed. Fixed asset is what? When you buy a car, when you buy a machinery, what are you doing? You are investing. What are we doing now? Yeah, go ahead. Yeah, tell me about the capital. Let us start with the capital. If you look at the share capital out here, what has happened? Previous year it was 1250, this year it is 1500 obviously. That means what has happened? $250 has increased. It is not a bonus. Because why it is not a bonus? Because there is a statement given out there. You can also read it. It could be a bonus. Bonus means no cash inflow. In this case, they've issued fresh equity shares for $250. It's clearly mentioned out there. So what has happened? When I issued fresh equity shares for $250, what happens? Inflow. Don't, sir, it is a liability, I have to pay back. Don't worry about all that. We are worried only about cash. No liability, no asset out here. Money coming, money going out. That's all. So cash inflow from issue of shares out there 250. Yes, ma'am. Reserve, what happens? Reserve, is it a cash flow? Where, how does reserves come in? Accumulation, that's all. Reserve comes from where? Your profit, whatever you are culling out of here. Is your profit cash? Then let us not worry about it. Whatever, let us not worry about it. That has nothing to do with cash. Yeah, long term debt. Tell me, ma'am. Last year was last year was 1040. This year was 1110. That means $70 is the net increase what you see. But just go to the point number 2 out here, point number 1 out here. It says, I raised a further debt of about $250. So what is happening? Further 250 inflow. Then why is it not adding up? Don't worry, we will come to that. There is an inflow of $250. Then I read out what I call it as interest expenditure, interest expense amounted to 400, in dividends paid, taxes given, what do you call it as during the period, your property, plant, etc., sundry debtors, creditors, everything is fine. Now, though you have got $250 inflow in terms of long term debt, your net increase in debt is how much? Only 1040 minus 1110. That means how much is the increase? Only $70 is the increase. Why only $70 is the increase? Simple, sir. You take it, what the statement gives you only the new debt what you have taken. It is not giving you what is the debt you have repaid. It would have reduced because, for example, now what would have happened? What is the debt last year? The debt last year was 1040. I have got a new debt of 250. So, ideal total debt is 1290. Whereas, according to the books, what is it? It is only 1110. That means what is happening to the remaining debt? You would have ideally repaid in the process. Am I with you on this? So, I will explain again. That is, cash flow from new debt out here is 250. Am I right? Now, I will say cash flow because of repayment of debt. What is the kind of repayment of debt that has occurred in this particular case out here? What is the kind of debt that I have repaid out here? Long term debt I have repaid. What is the amount I have repaid? See, 1250, if 1040 was the old debt, 250 is borrowed, that means 1290 should be the ideal new debt, whereas ideal debt, what the ideal debt it should be 1290, whereas in the balance sheet says 1110. That means what is the difference? 180 is the debt what you should have ideally repaid in this particular case. 250 is the increase. That is extended, that is a full sentence. I first broke it only for share capital, now we looked at the second half of it. Now what else pertains to, what do you call it as investing activity in this particular, financing activity in this particular case? Interest expenditure. Interest expenditure is basically what is called as a cash flow because of what is called as interest expenditure. Interest expenditure according to the balance sheet is $400, according to P&L is $400. Now, last year interest payable was 100, that means what is the total interest payable? 500. This year it is still due of about 230, that means how much you should have ideally paid? 270 is what you would have ideally paid out there to 270. Yeah. Yes, ma'am, go ahead. Oh, sorry, this one? Okay. Interest. Now, there is an interest expenditure in the P&L. P&L, ma'am. Interest expenditure in the P&L. Interest pertains to what? For a borrowing, financing activity. What is the interest expenditure in the P&L? To 400, right? It is 400. Was there anything due at the beginning of the year? Payable, liability side, balance sheet. What is the due at the beginning of the year? 100. That means last year 100 was due. This year's interest payable is 400. That means what is the total liability as far as interest is concerned at the end of this year? 500. How much is still due at the end of the year? That means how much have you paid? What have I done? Agreed? Then is there anything else I am left out? Where is it? Huh? Point number 3. Look at point number 3. Point number 3. That's it. Point number 3 says dividends paid rupees 1200. Yes, Malika? Any problem? Point number 3 on the other side of the balance, on the other side of the paper. What I say is 1200 is the dividend paid. Dividend paid occurs after the net profit is calculated. That is why it is not shown out there. Dividend is paid after the net profit is calculated. So 1200 dividend paid. Dividend paid is because of a what is called as a financing activity out there. Why do you pay dividend? You pay dividend to whom? Yeah, beautiful. Equity shareholders. Equity shareholders. Okay, shareholders is fine. Preference shareholders also you pay dividend. Dividend is paid to shareholders. Dividend is paid after net profit is calculated. When dividend is paid, it is a cash outflow or inflow? Outflow. Outflow because of what? Financing activity. That is all. So now calculate what is the cash flow from what is called as financing activity. What is the cash flow from financing activity? Minus. So far so clear? Now we need to know whether whatever we have done is correct. Now let us come to that. What are the cash flow from operations for this particular company? Cash flow from operations 18 plus or minus? Plus 1830. Cash flow from what is called as my investing activity was negative 30 plus 30. Cash flow from financing activity was negative 1150. That is the cash that has been generated from these three activities to the year. Am I with you or not? So what is the cash that you should have on your in your cash box as of now? All these things put together, only these three things. But there are some cash at the beginning of the year, no? There are some cash when you started it, right? What is the opening cash balance out there? Opening cash plus cash equivalents. Now I will talk about what is cash and cash equivalent. You raise about marketable securities. Marketable security, normally we treat cash and cash equivalents, that is what we will say. When we say cash equivalents, anything which can be converted to cash in a jiffy, anything that can be converted to cash in jiffy is treated equivalent to cash. Most of these marketable securities I can just trade it and then generate money out of it. These are all normally, because instead of keeping it in the liquid form, you are keeping it in a some form which is basically little more secure, which could be tradable, which could possibly earn a little bit of return also for you. So when we say marketable securities, normally we will consider as equivalent to cash, cash plus cash equivalent. When I say cash, it is not only cash, cash plus bank account plus marketable securities, because your bank account money is also equivalent to cash, cash bank plus your what you call it as marketable securities. So what is the opening balance of cash and cash equivalent? 25 plus? 135. Now can I just add and total and whatever it is? 9, no, it will not be 920. 1830 plus 30 plus minus 150. 5 is there, no? 130, yeah? So 135 plus 25 is cash. What is the total? That is what I asked you. 135 plus 25, how much is it? 160. How much is it total? How much is the total? 8? All of you got 870? Now go to the current year's cash and marketable securities, find out how much is it? Current year's cash and marketable security, cash and cash equivalent. So that means, what have I done? I have traced the cash, I have taken the last year's cash out here, last year's cash was so much. I have traced the cash out there and then brought it to the figure of the current cash balance out there. That is all what I have done. I have tracked the path of cash in these three things. See, what is the current year's cash and cash equivalent? 200 plus something, 870. So this is also 870, which should be equal to current cash plus cash equivalent. Current cash plus cash equivalent should be 870, and you can actually check it. If your cash flow statement is correct, then this will match. If your cash flow statement is wrong, it will never match. Obviously, right? What have I done? I have taken last year's cash, right? I have traced what is the money that is generated from operation, net money. I have traced what is the money that is generated from net investing, what is the money that is generated from net financing. Obviously, that should all be equivalent to current cash, what I have, cash and cash equivalent what I have. That is all what I have done. What do you call it as? Can you give me a walkthrough? That is in the interviews, I think you would be asking, when you are interviewing some freshies from our MBAs, you would be asking, can you give me a walkthrough of your MBA program? Like that, this is just a walkthrough of the cash that is going on, going in and coming out of your business out there. That is all. I just took a walk through the cash out there, cash that is coming in and coming out, what has happened. Only thing is, I grouped it into 3 different buckets. Normally, why do I group it into 3 different buckets? Because we have 10 minutes more. Let me sort of talk about it. Why do I group it into 3 different buckets out here? Now, your cash can be very high because of too much of financing activity. Now if its cash is very high because of too much of financing activity, not very good, because I need to know whether my operating activity is giving me a positive cash flow or not. If my operating activity is not giving a positive cash flow and my investing activity, there is what is called as too much of a negative cash flow, and there is too much of a positive cash flow in financing, that means what am I doing? I am not taking care of my operations, I am borrowing and investing in trading out there, investing in an activity which is unrelated to my core activity. Simple. Yes, Mr. Srinivasan. Huh? 160 is cash and cash equivalent, sir. What is cash? Cash, what is the cash in the opening cash? $25. Cash equivalent, I said anything which can be converted to cash in a jiffy is always called as cash equivalents. Somebody can say, sir, marketable security is weekend, I cannot convert. Let us keep all that aside, right? Weekend only, because you are here in the class, you can't do work out there. Only when you are working, we are talking about it. So only 5 days a week. So cash and cash equivalent, that is the total out there. Yes, Murali Krishnan. Any question? Hazarika? Fine. Okay. So what are we looking at? In the ideally, what we see out here in this particular case is, I see that my operating cash flow should be sufficient enough for my investing, right? That is, I should invest from here out there, and this should be sufficient enough to repay for an established company, for a company which is ongoing, which does not need any new capital. It should, my operating cash flow should take care of my investing capital and should also take care of my financing, that is when I am repaying all the financing out there, that is if I am repaying the debt for meeting all my interest obligation, dividend obligation, everything, this should ideally take care of these two. That is what we are trying to see out here, because you have to generate money from your operation, and the money that you are generating from the operation is what you will invest in buying further machinery for an established entity. The money from you are generating from the operation is what you are going to use for paying off the dividends to your shareholder, that is basically the financing part of it. So your operating cash flows should encompass these. So here, if somebody says I am cash rich, I am cash rich, I am cash rich, if I just do this statement, I will know whether the cash richness is because of a financing activity, that is too much of borrowing can happen and could be possibly because of that also. One can argue, I can detect it from the balance sheet, yes, but still. So what we do, the money that goes out of the business, the money that comes into the business, we are categorizing into 3 different buckets, and that will give me what is the total money that is there generated because of each of these 3 activities. I add it to my opening cash that is there, will obviously give you your end of the year cash out there, that is all, nothing beyond that. Now if you look at your outline, I have given some specific exercise numbers, problem numbers. 11.4, I think exercise, I am not very sure about the exercise number. Outline is there with you? Please bring the outline also to the class. What is the cash flow statement? Which chapter? Open it. 11, chapter 11. Don't worry about chapter 11. You can just note down. I will give you the exercise numbers also out here. Aman, don't be a little perplexed that why from chapter 3 I have jumped to chapter 11. Don't worry. If we have to cover the whole book, it needs a year, right? We cover what are the important aspects out there, that is all. Now you can attempt some of these problems out there. I have 11.4 is something which you should attempt on your own. If you have a problem, let me know. I will do it in the online class next week. One of the online classes I will spend a little bit on what do you call it as discussing the balance sheet and P&L of what is there with you. That is the Maruti Jokes heard. You can have that copy ready with you, as well as we will try and see if we can discuss 11.4 also. 11.4 and 11.5 also, these two basically you can possibly try on your own. 11.4 and 11.5, that will complete the cash flow statement per se.